Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the S&P coming very close to an all-time high, not quite, and the Qs down a little bit on the day. Now, today was a day of mixed action, but it was a day of very nice broad market rotation. Unfortunately, a lot of the major tech names were red on the day, but look at the rest of the market. The rest of the market putting in some pretty big gains to kind of absorb some of those big tech losses. Of course, the big tech losses were a result of Oracle's poor earnings performance, which really dragged down the entire tech sector. It was down a lot this morning, not just Oracle, but the entire sector, and they did recover a little bit into the end of the day. But the best story of the day today has to be the breadth of the market. And the reason, of course, for the breadth of the market expansion was what we had yesterday with Jerome Powell. Number one, this summary of economic projections, which showed that the GDP rates for 2026, at least the projections for them, are much higher with a stable unemployment rate, a drop in the forward inflation guidance projections, and just keeping interest rates somewhat data dependent. That plus the $40 billion in treasuries that the Fed is going to be buying, basically a liquidity support for the markets, helped the markets to really broaden out today as it kind of really slimmed the chances of any possible recessionary fears that people had leading into yesterday's meeting with the Federal Reserve, which is why you're seeing many sectors of the market participate in a very decent fashion to the upside today. Now, in today's video, guys, we have a whole bunch of things to talk about, of course. We will talk about the rotation, why it happened, where it happened, and which sectors stand to benefit the most coming into the next few weeks and months of trade. But additionally, we have a whole other bunch of stuff to cover. Number one, I'll be taking you guys through a few key news reports from today, just very interesting facts that I figured I should bring to you. Number two, we have two earnings presentations to go through today, and those will be very simply Broadcom and Costco. Shout out to the other names such as Lululemon, but just to save a bit of time today, we'll focus on Broadcom and Costco for today. Maybe we can catch up on good old Lulu tomorrow or something like that. So we'll be covering those two earnings presentations as Broadcom right now is down in the after hours. They were up and then sadly they went down. We'll explain why. And Costco down a little bit despite reporting very good numbers. We'll cover those earnings in part 2 of the video. Thereafter, we will do a full technical analysis rundown of the SPY, the Qs, and all of our minor sectors. Check on that rotation, check on the broadening out of the market, and what could be some possible nice trade ideas into 2026 if we take this summary of economic projections at face value and we derive the possibility for not having a recession, right? Tipping the scale more and more towards the bullish expansion of the overall market, which would, of course, encompass the recovery of the consumer, the ever so elusive recovery of the consumer that we've been talking about all year so far. So we'll take a look at the rotation, of course, very important for today. Thereafter, we will go over our big tech names. And we know that a lot of big tech names have been very soft in the last few weeks of trade. So once again, we will evaluate these names at their current price points and derive, are some of them good for some trade opportunities or maybe even some longer term portfolio buys? At the very end of the video, we will be spending some time on the biggest gainers and losers of the day list, of which there were many, of course. And that's why I'm not doing Lululemon tonight. I really want to get some time to do this list because we haven't done it so far, at least yesterday's video, and I don't believe on Monday either. So we'll take some time to look at a few key names here that were down on the day, a lot of other names that were up huge today, and derive whether or not we can find some further trade opportunities in that list. And that should be it for today, guys. I'll save the portfolio review for tomorrow. And let's jump right into the action. As always, guys, if you want to skip to a certain portion of the video, just always remember the timestamps to the different sections are below in the video description. With that being said, let's jump right into the action. The SPY up 0.33, the Qs down 0.32. And you can see in the after hours right now, down a little bit because Broadcom's earnings brought the market down a slight touch, not as much as Oracle did yesterday, but a tiny little bit. So taking a look at the heat map again, you'll see what we were describing in the introduction. Very weak tech names today, of course. Microsoft and Meta doing their best to kind of hold up the pack, but other than that, it was a very soft day as a result of those Oracle earnings. Financials, very strong day after the rate cuts yesterday and the summary of economic projections. Extremely strong day. And look at Visa and MasterCard, man. Some of their best days all year were had today. Moving on further, healthcare, not too bad of a day, bouncing. And then the bottom half of the market as a result of those interest rate cuts and the 10 and 20-year yields marginally coming down. We had some broadening out of the market here on the bottom half and some of the interest rate sectors as well. Taking a look at your one-day relative performance, you'll see it was a pretty good day all across the board. Only communication services, which is largely Google and Meta at this point, right? They were down. Technology was down, sadly. Energy was down as well, but the rest of the market really performing quite well. On a one-week relative, you can see that broadening out of the market a little bit better to where technology is not at the top of the board. No, it's basic materials, financials, industrials above them, and even consumer cyclicals coming back up a little bit. To the downside, utilities, energy, communication services, real estate, and even healthcare a little bit to the downside. So the market is broadening out one day at a time, and as a result, we are now in a neutral stance. It's been a while, right? I know. For the past month and a half, we've been stuck either in extreme fear or fear categories. Now actually neutral. Market momentum has officially clipped into greed as we've created some distance between ourselves and the 125-day moving average, which is used for this analysis. Stock price strength, though, net new 52-week highs. Well, we don't have many new 52-week highs, but at least we're not getting that many more new lows. So this keeps upticking a little bit. Stock price breadth, as measured by the McClellan Volume Summation Index, is a lot better than we saw previously in the month of November, but definitely not what we were seeing at the highs of July. So many indicators here flipping from either fear or extreme fear over to either neutral or slightly greedy. You can see the put and call options. Now, not that many puts anymore in the market, at least not as much as there were back to the end of November. And even the VIX coming down to a more manageable level overall. So not too bad, upticking into neutral. And a quick glance for your market breadth is the following, right? Percentage of stocks above their 20-day EMA. Finally, 74% of all stocks now above their short-term moving averages. So many more stocks and many more sectors broadening out. This usually is some of the higher areas that you will probably find in terms of the reads on this chart, which is very good. It can lead to some short-term pullbacks, but short-term pullbacks on the short-term EMAs, well, those are just going to be for a possible further upswing and more broadening out, right? So it's going to move like this. Usually what happens is we move like this and we keep clipping into it as this 50-day EMA chart continues to push a little bit higher. You'll see here percentage of stocks above their 50-day EMA, 62%. And now we're getting back to some of the more bullish periods of time in terms of market breadth, either late August or rather late September and August as well, and even during the summer as well, when we were up there in the 70% range. And percentage of stocks above their 200-day EMA, getting better, guys. Now as bullish as we were in September or at the same time earlier in the summer in June and July as well, which were pretty good months for the market. So very nice broadening out of the markets. The rest of the market is definitely there. And you're noticing something, right? To where before in September and October, it was basically big tech and AI names versus everything else, and nothing else was participating. Now it's kind of the opposite. A lot of big tech names are still not performing the best. You got a few outperformers here and there, but still not the best. And some segments of the AI trade still have not come back. However, you're getting some very nice rotation into financials and some consumer-facing names. At least that's been the case over the course of the past 2 weeks. So you got to notice this rotation as it happens. Before we get into more technical analysis, though, let us do a quick little look into some of the earnings, or rather, sorry, some of the news events that I have prepared for you guys today. Number one here. This was very notable to me today. The U.S. September trade deficit, which was released today, narrowed to $52.8 billion, the smallest since June 2020, as exports jumped 3%, while imports rose 0.6%. So now, this is actually not too bad. The tariffs are actually working, right? So they're not leading to that much inflation either. So the monthly deficit, right? Very good. They're bringing the trade deficit down. We talked about this extensively. Obviously, there's pros and cons to this. I kept saying back in the day that the U.S.'s competitive advantage is not so much manufacturing, but rather the export of inflation and the export of dollars. A lot of you guys know that. A few of you guys don't know that, but that is indeed the case. Now, though, this was the goal for the administration of bringing down the goods and trade deficit, and it has been brought down to some of the lowest readings that we've ever had. Well, not ever, but some of the lowest readings that we've had in the past 2 years. That was pretty bullish. Moving on to piece of action number two. Historically, market tops are preceded by investor euphoria. Are we in a bubble? Often for long periods of time. So where is it? And this analysis is done by Sentiment Trader. You can see right here, where is the euphoria? We're not seeing it. I was showing you guys the fear and greed index and the overall lack of broad market participation coming into the month of December. Although some people are claiming to say that it's a bubble right now, a concentration of the markets rather, there's a lot of room to broaden out the rest of the market. And definitely, especially in terms of investor sentiment surveys like the AAPL investor sentiment survey or the Michigan consumer sentiment survey, right? People are not that euphoric. Maybe if you're in the echo chamber of AI on Twitter or something like that. But broadly speaking, no, right? There's so many different names and so many different sectors, guys, that haven't done anything over the past 2 years. So keep that in mind. We are definitely not in an overall euphoric period of time in the markets right now. Moving on a bit further, the S&P closing near an all-time high. Now, when you have a 5-10% pullback preceding that, such as we had during the month of November, and a quick recovery to all-time highs, what happens thereafter? Well, you'll see some statistics here. A few days later, you're usually always positive. So this is going to be into next week's action. Usually always positive, but look at the prints for 1, 2, 3, and 4 weeks later. Decent, and even 2 months later, right? So the statistics are in our favor of this rally potentially continuing. And of course, seasonality is in our favor as well as closing in terms of closing out the month of December in a strong fashion. So we got a nice amount of statistics here to kind of corroborate that we may, especially if we see more breadth expansion here, that we may just be due for a nice end of the month of December. Moving on further here, a couple pieces of news. NVIDIA to host a summit on data center power shortage. Now, Jensen Huang has been coming out in the last few days, few weeks, saying that the major constraint for the AI trade is not so much the data centers, it's the power. So we will get to hear from them possibly in the next few weeks and his thoughts on what could possibly be done to solve these things, or maybe some clues as to where we could possibly rotate our money into some of these very juicy energy plays, right? Because he'll talk about probably the benefits between natural gas, solar, how battery storage comes into that as well, et cetera, et cetera. So we'll want to pay attention to this when Jensen actually gives that summit. Moving on further here, Amazon's Zoox, their ride-sharing services, their autonomous vehicles, right, has cut a multi-year deal with the T-Mobile Arena in Vegas. Starting in early 2026, fans will be able to ride Zoox robotaxis to the 20,000-seat venue with a dedicated pickup lane at the West VIP entrance and in-arena branding as Zoox scales its Las Vegas network. That was pretty cool for Amazon, right? Now, their Zoox mobiles are not the craziest, right? If you have never seen them before, they kind of look like little awkward buses, something like that. But it's cool. Hey, at least they've secured a pretty decent contract, right? And could be something interesting. If ever you're in Vegas, let me know if you get to ride in an Amazon Zoox. Moving on further here, Google Gemini. Google is bringing its built-in Gemini AI to Chrome on iPhone and iPad. Users in the US can tap the new Spark icon to have Google Gemini summarize pages, build facts, or tweak recipes, but it only works in English for signed-in users 18 and older and not in incognito mode. So you'll be able to use, and keep in mind, right, this partnership between Google and Apple was announced about a month ago at this point. You'll be able to use more and more Gemini features on your iPhone. Should be quite interesting. And they're also helping out for Apple's own in-house Siri platform, of course. But as of right now, you will be able to use Apple's main competitor on the iPhone itself. So that's pretty cool, right? On the iPhone and iPad. So those are a few major things that I thought would be interesting to bring to the analysis today. And now let's jump into the juiciest part of the video. Maybe you guys think it's the biggest gainers and losers section, but the earnings should be pretty nice as well to run through. So let's get through it, right? We're going to talk about the big one, the elephant in the room right now. Broadcom down 4.61% in the after hours right now. You know what's funny is they were up 4%, 3% roughly, and then they came down when the CEO was speaking. So why did they drop in spite of posting good numbers? We will recap everything. And is Broadcom a good buy down here under $400, where they were literally trading what, 3 days ago? So is Broadcom a good buy? Let's have a look right here. In terms of their earnings numbers, EPS beat by 4.43%, which is very good, and revenue beat by 3.14%. Also very decent numbers at a very first glance. Moving on into the easy numbers for Broadcom. Broadcom, guys, in terms of the guidance, right? Because we talked about what they beat so far, but the guidance, Q1 sales, $19.1 billion, which was above the estimate. So they beat on the sales estimate and beat on EBITDA estimate as well, 12.8 versus 12.1. Easy numbers look something like this. Revenue up 28% year over year. Fantastic print by Broadcom. Semiconductor revenue 55% year over year, which is their fastest growing segment, of course, due to their AI chips. Moving on, adjusted EBITDA 34% year over year. So they're becoming more and more profitable. Look at these margins. Slowly curling up and to the right. Very nice to see. And a casual 37% increase year over year on EPS. I'll remind you that Broadcom is going into its own accelerated cycle of revenue into, like we saw on Oracle and so many other names like NVIDIA as well and AMD, into the back half of 2026. This Q3 and Q4. See, Q1 and Q2 are just basically flat. And that also is one of the reasons why Broadcom stock is down, because they guided for somewhat flat revenue and EPS next quarter. So sequentially, not year over year, that'll still be explosive, but sequentially, we'll talk about it a bit later. But just want you guys to realize that for a lot of these names, whether it's Broadcom or AMD or NVIDIA or a lot of other data center players, right, or chip players directly, the bulk of the ramp is second half of 2026. So keep that in mind. And then acceleration through 2027 on EPS. Same thing for revenues, right? Acceleration back half of 26 and into 2027. Now, when I show you why they're down today in the after hours, that'll all make sense. And you'll just get to understand that once again, earnings are a casino, and that maybe the after hours moves off of earnings do not perfectly describe the status of a company right now. So those are the easy numbers. Moving on to a bit of the article right here. Broadcom beats on earnings and revenue and says that AI chip sales will double in the current ongoing quarter. So Broadcom said revenue in the first quarter will be about 19.1 billion, which would be 28% year over year growth. 28%. Why does that matter? Well, that's because that's exactly how much revenue they literally just did, 28%. So unfortunately, sequentially, we don't have an acceleration. But now that I've shown you where their acceleration comes from, well, now you understand, right, why Wall Street is, well, why the algorithms dropped it when the CEO Hock Tan was speaking during the earnings call. As a matter of fact, he said in Q1, we forecast non-AI semiconductor revenue to be approximately 4.1 billion, flat from a year ago, down sequentially due to wireless seasonality. Now, this is non-AI semiconductor revenue, and this is literally the only bad thing from the entire earnings call overall, which when he said that, the stock proceeded to be green. Well, it was green, and then they started talking about that stuff, right? About the sequential flat revenue growth quarter over quarter and then year over year for certain segments of their semiconductor trade, because they have multiple segments, right? Non-AI, AI. That's why. Yes, Wall Street is literally that picky, but when the stock is up, you know, how much is it up so far year to date? 72%. Well, you got to keep justifying that outperformance by showing crazier and crazier numbers, right? And anything that they can pick apart, they will definitely pick apart. It was very small for Broadcom, but I just thought you guys should know the only thing that brought it down during that earnings call. CEO Hock Tan said in a statement that Broadcom expects AI chip sales this quarter to double, as we said, from a year earlier to 8.2 billion, both from custom AI chips as well as semiconductors for AI networking. Net income climbed 97% to 8.51 billion. That is very strong, guys. That is much better margins than they showed previously. Roughly about 40, depends if you use GAAP or non-GAAP, but roughly mid 40s in terms of net margins, which is a big increase, guys. Last quarter was like 26. You know, the quarter before that was in the mid 30s. This is the best quarter that we've possibly ever seen from Broadcom at this point in time. Mid 40s net margins just goes to show you how efficient this company actually is while it scales. Moving on further, on an earnings call with analysts, the company said it had acquired a fifth customer for its custom chips and revealed that Anthropic was the previously unnamed customer, which had placed a $10 billion order for Google's TPUs during the quarter. They hid it from us. You remember last quarter? Maybe you don't remember. Only I remember things such as this, but they said they had 4 big customers and that they didn't want to reveal number 5 for confidentiality agreements, right? Now they revealed it. It's Anthropic. Wow, party spoil, I guess, at this point, but very solid, guys. Anthropic is using the latest Google TPU called Ironwood, Hock Tan said on an earnings call with analysts. He also said that Broadcom's other customers prefer to control their own destiny by continuing to drive their multi-year journey to create their own custom AI accelerators, or XPUs, as we call them. Pretty much saying that they're trying to diversify away from NVIDIA, but still will be using a lot of NVIDIA, but that they want to supplement the GPU power with their own in-house TPU power. He said that Broadcom had added a 5th customer for custom chips, which had placed a $1 billion order expected to be delivered in late 2026. Broadcom has a $73 billion backlog for its custom chips, switches, and other data center parts for AI over the next 18 months. This is a massive backlog for Broadcom, and there's never been a lack of demand for this company. Literally for the past 4 earnings calls, every single earnings call, he says there's big demand through 2026. Still, there is still massive big demand, and there's also no supply constraint from AVGO, which is very good as well, because a lot of times you run into supply constraints, none from them. Broadcom's other major segment, infrastructure software, which is led by their acquisition of VMware, which they did a couple years ago at this point, reported a 26% growth to $6.94 billion in sales. So the infrastructure component of their business, this one right here, doing very well, right? Semiconductor solutions, doing very well, and even infrastructure software. As you can see, there's many components to that, but both divisions of the business doing really well. Just to recap those numbers, guys, the semiconductor solutions, 35% year over year, and their infrastructure software solutions up 19% year over year. Very solid performance by this business, and that looks something like this right down here. So there you go. There's your net revenue, smooth up and to the right, but further acceleration into second half of 2026. Gross margin, they've been doing a great job of expanding their gross margin now at 78.6% on a non-GAAP basis. Really good. Look, this is fiscal year, right? Very good expansion year over year. Moving on further, adjusted EBITDA. Look at this massive gain in earnings, guys. Super strong. And free cash flow. What a quarter in free cash flow for Broadcom. A fiscal year ending for them. $26.9 billion over the course of this quarter. Free cash flow was about $7.47 billion, which is very strong. Now, because of how high their market cap is, that's only a 1.35% free cash flow yield, but still very strong numbers in terms of free cash flow for the business. And they're growing their common stock dividend. I mean, they announced another dividend raise, but let's be honest, if you're buying Broadcom, you're definitely not buying it for the very juicy 0.5% dividend, right? At least I hope you're not. But still, right? Notable that they do drive shareholder returns when they can, right? As of right now, they're spending a decent amount of free cash flow on CapEx and things of that nature to make sure that they can sustain the demand that they have for the business. But overall, nice to see that they're still returning a bit of capital to shareholders overall. In essence, guys, Broadcom had a very solid quarter, but Wall Street picked apart this little tidbit here. This little tidbit about sequentially flat revenue year over year, or sequentially flat quarter over quarter into Q1 of next year, but also just one division, right? Non-AI semiconductor revenue to be flat from a year ago. Now, I'll remind you, accelerating in the second half, but Wall Street just didn't like this. They want to see constant sequential growth every single quarter. You're not getting it next quarter, so they did drop the stock when they talked about that during the earnings call. That is literally the only thing that you could possibly pick apart from this earnings call, because other than that, it was very strong, dare I say, almost perfect. Now, that being said, we already went over the growth metrics for Broadcom. You guys already know they're expanding margins really well. Just a quick recap of the balance sheet as well. If you take a look at the balance sheet down here, you will see that this company has a decent amount of debt, but it's important to understand where that debt came from, right? That came from their acquisition of VMware, which is really doing well for them, guys. VMware for them is growing still above 20% year over year, which is very good. But a lot of that debt came from VMware. And what do they do with a lot of their free cash flow? Well, yes, they spend it on CapEx, but they've also been proportionately paying down this debt. This company has really good management here of the free cash flow. So they're paying down the debt overall, which is something you definitely want to see. So the balance sheet is not too bad. That acquisition was very accretive for the business, but nice to see them paying it down overall. Now, moving on to the valuation, guys, at $388 so far off of the 12 EMA in overbought conditions. Is it a good proposition to be buying Broadcom here for a swing trade or long-term portfolio trade? Well, swing trade, you guys know me, probably not, right? I need to see a bit more consolidation. There's a lot of names, other semiconductor names, which we cover every day on the channel, that have a combination of both. They have a technical pullback to a nice level, not in monthly overbought conditions, and also have a very cheap valuation. We talk about those companies every single day almost. I'm pretty sure you guys know which ones I'm talking about. So Broadcom, no swing trades for me. It's a very greedy long. Swing trades on Broadcom up here. But for a long-term portfolio, for me, is this one a buy, a hold, or a sell? Well, let's move into it, right? In terms of your forward price to earnings ratio, excuse me, these should read 2026. They are 2026 numbers, but I just didn't change these titles. My apologies. So they're growing revenue 25% per year through 2028, and EPS, they're growing 28% year over year through 2028. But like I said, the acceleration, the reason that it's so high is because next year it's like 20, and then it goes to like 30 plus, right? So big acceleration here into 2027. EPS and revenue as well. This is the huge jump, 26 to 27. That's what gives them very high rates. They won't have these rates forever, but if we derive a 3-year forward EPS average, well, you're going to get a price to earnings average here, or rather for next year, 2026 forward PE for 2026 of 44.6. If you use the average 3-year EPS growth rate and you divide the PE by that, you get a PEG ratio of 1.6, which is not terrible, but keep in mind they will not be growing this EPS rate forever, right? And they have a 1.35% free cash flow yield. So is Broadcom cheap up here? No. Is it expensive up here? No. Would I be buying it up here? Maybe. I wouldn't be starting a new position because I think the risk to reward profile is definitely not favored for explosive growth to the upside, at least not from here. But if I already had a position, right, that I'm looking to further build with a decent cost basis, possibly accumulated down here, would I mind DCAing in this position? No, I wouldn't, because most of my compound annual growth rate will be locked in with these shares down here, not necessarily up here, right? It's all about where your position is starting. What will be your compound annual growth rate for the next few years? That being said, right, this one is a slight nibble for me or a hold. It's definitely not a sell because Broadcom can definitely print a lot more gains for shareholders in terms of the next few years. It's probably not going to double, right? But can we maybe have market outperformance? Yes, the valuation is supportive of that. There is some room to the upside in terms of multiple expansion, which is what I hate to say because I never like to speculate for multiple expansion. But back half of 2026 and into 2027, you will have big fundamental expansion as well. Broadcom is an extremely solid company, a very well diversified company as well. They're not a one-trick pony at all. It's just that on the technicals here, we're running a little bit hot, a little bit extended, right? So I don't think we're going to get a pullback to the 12 EMA. But if you do, anything's possible. I mean, it's happened to the best of the best, right? Anything's possible. You can get these occasionally, right? You can get these occasionally to where you have big rallies and then pullbacks to the 12, etc., right? And it combines with a cheaper valuation. So Broadcom is not my first pick in semiconductors, but a very solid company nevertheless. And congratulations if you're a shareholder. You've had a very good year. I don't necessarily see any reason to sell, but would I start a brand new position here thinking that it's going to be the fastest appreciation for my capital? No, I think there are other plays that can run faster, but Broadcom, a very high quality company nevertheless. And that's everything for your earnings. Hopefully you guys enjoyed that. Now, company number 2, switching gears a little bit to Costco, the company that's only been down since the month of June. Now, Costco currently is still down, top to bottom, almost 20%. And you can see in the after hours here, they're down almost an additional 1%, just basically giving back some of the gains that we had during the normal session. That being said, Costco had a tremendous rally, guys. The last 2 years for Costco were super, super beneficial. The stock pretty much more than doubled at that point. And we've been consolidating here, which led me to say throughout the year that when we were having this period, before all this, I was saying this reminds me a lot of back here where Costco has these magnificent runs and then gets very hot in terms of forward multiples and then doesn't fall off a cliff to correct those multiples. No, just consolidate sideways into its multiple, but sometimes can be very slow. So did Costco have bad earnings today? No, they crushed it. Moving on to EPS gains here. EPS, 5.33% beat on EPS and a casual 0.24% beat on revenue. You're not expecting Costco to give you double-digit beats on revenue. They usually come in line or very close, but nice to see that their profitability is increasing. And a lot of that has to do with the uptick in memberships, but also the price of their memberships, which is now kind of fully realized as they've gone through the full year of their price increases and they've been able to kind of get the previous members whose memberships had to renew. Well, they got all of those people as well, not only the new people that were signing up, right? Now, moving on to the easy numbers for Costco. Easy numbers. Revenue was up 8% year over year, which is good. EPS 14% up year over year. Very solid. US sales, excluding foreign exchange and gas, 5.9%. This is same store sales. And then Canada, comparable store sales, 9%. One of the highlights of Costco's earnings right there. A very solid quarter for Costco overall. Taking a look, guys, you would be hard pressed to find anything wrong with Costco's earnings right here, yeah? Net sales, right? 8.2% growth, as we said. Comparable sales overall, not just US, 6.4%. super strong. Comparable traffic, 3.1%. Comparable ticket, 3.2%. These numbers are either in line or better with what they've been showing all year. Very strong. And look at these e-commerce sales. Last quarter was about 16%. Now 20% bump on e-commerce sales. They've been making a very big push right here. Nice to see them get even more. If you take a look at your sales across different landscapes here, or across different geographies, US 5.9, as we said, Canada 6.5, other international 8.8. Now adjusted is adjusted away from FX and gas. So excluding FX and gas, you can see the numbers here vary for Canada especially, but also in terms of ticket prices overall. But the traffic, guys, the traffic's really where it's at, right? US 2.6, Canada 5%, and other international 3.1, which gives you company totals, which are still very strong. Now, gross margins remain roughly in line with what they've been historically a little bit. They did bring down SG&A expenses a little bit right there too. Net income, $2 billion, 11.3% net income growth, which is very good. It gives them a 2.97 net margin, right, in terms of bottom line profits, which is not too bad. I'll be honest with you guys. You know, they've usually been around that. So Costco doing a great job of kind of protecting their margins right there overall, even in spite of the increases in costs, the tariffs and stuff like that. They still find a way to find very good deals for their consumers, and consumers really like it. And, you know, since the proof is here that they really like it. Worldwide membership renewal rate, 90% still. Well, 89.7 if we're being specific. US and Canada, 92.2. Very solid. 14% membership income growth, very solid. And in terms of paid memberships, 81.4 million, which is 5.2% growth year over year. Very, very strong, guys. Extremely strong numbers from Costco. You'd be really hard pressed to find anything wrong with Costco's earnings today. E-commerce site traffic was up 24%, and the e-commerce average order value was up a whopping 13%, as people want to do more and more of their shopping online. Additionally, similar to every single year, Costco continues to go for more and more warehouse expansions, for a total into the rest of the fiscal year, which will be 21 warehouses total combined, which should be pretty good for the majority of fiscal year 2026. Very strong here, guys. Very strong numbers from Costco overall. And in the earnings call, no problems with the consumer, although you do know that Costco is suing the Trump administration because of the tariff situation recently, right? Over potential, expenses and potentially lost revenues that they may have had it not been for the tariffs, of course. Very complex litigation that they will have on their hands right there. But overall, Costco, not very bad earnings report. Their earnings call, there were no massive highlights. There never really is. Just that their consumers remain very resilient and that they do cater to a consumer demographic, guys, which is kind of like, I would say, middle class and above type of thing for Costco. Let's call it like higher middle class and above with a bit more disposable income. So their customers haven't necessarily been that much affected by the tariff situation overall. And you can see that through their beautiful comparable sales numbers and their high traffic and high comparable ticket numbers as well. That being said, the only problem with Costco, and it's been the problem for Costco all year, has been the multiple, right? Costco goes through these expansion and compression cycles. Arguably, this expansion cycle has been much, much higher for Costco overall. If you take a look at their trailing 12 months PE history, you'll see here from 2001 to 2025, we are the highest we've ever been. Now, post-pandemic, okay, we had, variances between the, call it, mid to high 20s to about 40. And then in 2023, we kind of switched landscapes. We kind of started trading between 40 and 50 trailing 12 months, peaking at around 61 in February. Now, I'm a very big fan of Costco, a very big fan, and it's one of my favorite companies in my long-term portfolio. However, even I can realize when Costco is just not a good deal anymore. And when it was up here at $1,100, I'm not selling any shares, but I'm definitely not buying any. So considering the fact that the trailing 12-month PE is now coming down a little bit more, but still needs a little bit more to go as well, it doesn't mean that the stock has to absolutely plummet. What it can mean, though, because, if a stock were to plummet, that means that something is fundamentally wrong with the company. Nothing is fundamentally wrong with Costco. It's just that it's expensive, right? Usually stocks don't massively correct, guys, only if they're expensive. If they're expensive and then you have a fundamental problem, then you get the absolute flush. If they're expensive and you don't have a problem, will sometimes just end up doing something like this. An awkward, very wide, very long duration range with a slight bearish bias. And I do think that that is a possible likely scenario for Costco moving into the future, as even when we look at the forward price to earnings for 2026, you're still at about a 44, right? So keep that in mind. We might just have to consolidate a bit longer for Costco. And the P ratio, or excuse me, the PEG ratio is not the best metric for Costco because they aren't growing EPS at such a fantastic clip. But Costco, arguably up here, is still a little bit expensive. Now, am I DCAing into Costco a little bit? Keep in mind, my first buys in Costco were all the way back here. So almost every single DCA for me has been a DCA up, right? Would I mind DCAing here, buying a little bit more Costco? No. Am I going super heavy on my buys? No, because I know the valuation is quite high and I know that we may stay stuck here for a while, possibly in a range. If you do go down a bit lower, well, the end level support would be down here 800s, but that would be a screaming buy because historically, Costco never really comes down to the 50 monthly moving average. They didn't do it during the big bear market of 2022. They didn't even do it during a global pandemic here in 2020, right? So it's very rare for Costco to go for that deep of a retracement. At least that's been the case since 2010. So I want to play around this 26 EMA, and as a result, I hadn't bought shares of Costco this entire time, but recently, under 900, I'm just nibbling a tiny little bit, just increasing my position ever so incrementally. And as we stay here, or maybe even move a little bit lower into the 800s, I'll just be incrementally building my position, as I do believe that the logical price action at this point, especially if their fundamentals aren't getting worse, I do believe that it may just be some sideways consolidation, as it does sometimes before going into its next phase of expansion, just looking for a little bit of multiple normalization or a little bit of multiple compression, as they say. And that's everything for Costco's earnings, but definitely nothing wrong with the company. But starting a full-size position up here, probably not. If I wanted to start a brand new position on Costco up here, what I might be doing, not financial advice, but if I had to, let's say it's my first year in the market and I want to buy Costco, well, maybe I would start with a 40 or 50% position of however much capital I want to put into it there. And then maybe I would embark on a DCA plan for the next 4, 5, 6 months, saying every month I'll put in $1,000 or however much, divide the rest of the percentage. Maybe, I don't know what the price action could be. We could go down there, right? Maybe you buy some here, and then maybe over the months, maybe some there, some there, some there, some there, some a little bit higher, some a little bit lower, but at least you're embarking on a DCA procedure when you don't know where the price is going to go, but you do know that you're paying a little bit more for it. And as a result, we're probably not going to see this massive move on Costco. At least I wouldn't think so. I would love for it to happen because I'm in, right? But I also would not be surprised if you have a little bit of, normalization here and compression on the multiple if we consolidate sideways while building upon strong fundamentals for the future. That's everything for Costco, and that wraps up our earnings recaps for today. Hopefully you guys enjoyed those two companies. Now, let's dive into some charts, shall we? And we're going to start off with the good old S&P 500, very close to its all-time highs. So talking about the S&P, so a little bit of context first. You remember this bearish and bullish tailwinds chart, right? The bearish short-term narratives versus the bullish long-term catalysts. Well, number one is still the AI contentions, right? In terms of we're in a bit of a lag period right now, right? To where we had some very nice AI growth for late 2024 into 2025, right? So the market went like this in terms of AI names, big tech names. But now we know from CoreWeave, from Oracle, from Microsoft, from a lot of these players, right? From NVIDIA as well. The next phase of acceleration for a lot of these companies is second half of 2026, when all the data centers actually start to become online. That is here. Now we're in a little bit of a middle ground period, which is why you have all these short-term bearish narratives surrounding AI. Did we spend too much? Is the depreciation cycle overstated, et cetera, et cetera, et cetera? You guys know those. We've been over those for the past few weeks, which is why some of the big tech names have been lagging and some of the AI names overall have also been lagging, right? So we know that this is still a point of contention for the markets. However, yesterday, a very important day yesterday, right? This summary of economic projections and Jerome Powell's statements and his Q&A session, very dovish. Everybody was going into yesterday with the impression that Jerome Powell would be hawkish to us overall and say that the labor market was deteriorating, possibly seeing some upticks in the unemployment rate. That's not what we got. If anything, he reiterated the fact that AI was contributing a lot to the 2026 GDP growth rate. Essentially, if you read between the lines, guys, and the $40 billion worth of treasury buying and stuff like that, right, basically supporting the market with liquidity, essentially what's going on here is they realize that AI is a critical component to the GDP expansion, right? They also realize that the labor market is in a no hiring, no firing environment. So they want to be somewhat accommodative to the markets. Now they ended QT. They're starting with a little bit of bond buying, $40 billion, of course, right? And they also know that the inflation will not persist. So we were very dovish yesterday. And they also know, Jerome Powell talked about this, right? It is a K-shaped economy where the bottom half of the consumer is struggling, both perceptions of the economy, right? But also in terms of their spending. The people that have been doing the heaviest lifting, guys, are the top 10%. They are the ones that are representing 50 to 60% of consumer spending. Those guys feel rich with what? With assets. With assets. If you read between the lines, right? You have a two style right now. You have two people that are trying to protect the top end of the K right now. Number one was Jerome Powell yesterday, okay? Number two is obviously the Trump administration. They want to protect this side of the K-shaped economy at all costs, essentially, right? So that being said, you now have a situation whereby the jobs, although the creation of jobs is somewhat softening, right? We're not falling off a cliff. The consumer status, although the lower half is not that good, the upper half is very good. They feel rich with assets. Essentially, what I'm trying to say here is both parties, both the Trump administration, clearly, and Jerome Powell now, clearly, if you read between the lines, they understand if you lose this market and you lose the top side of the K right here, that's it, man. You lose the economy, right? So they will do everything in their best interest to protect that until, I don't know why I keep erasing it, sorry, you get the bottom half back, okay? Yesterday, with this bullish summary of economic projections, and they're not just putting out these numbers just to put out bullish numbers to make people feel bullish. No. This is backed on real data, right? They do not see any problems in terms of falling off cliffs on labor, in terms of inflation, no crazy upticks in inflation, right? And AI will definitely support GDP all throughout 2026 with that infrastructure build out. Now, they're not being too kind to us in terms of the rate cuts. That's a different story. They're still being data dependent there. But they realize if you lose the top half of the K, guys, if you lose this market, man, and the wealthy people just stop spending, like, you're cooked. There's no other way around it, right? You lose the economy at that point. And they don't want that to happen, right? So as a result, now that we've almost somewhat guaranteed, and now there's puts at play, right? There's the infamous Fed put, but there's also the Trump put. They've almost somewhat quote unquote guaranteed a situation whereby they will try and avoid a recession at all costs. That is what the institutional money is reading into it, which is why today you're seeing such massive upswings in terms of positioning into consumer staples. I had a very good day today. In terms of financials, this is noteworthy, guys. Visa, this is big money. This is not retail, okay? Visa does not move up 6% off of some retail trader's tweet on Twitter. MasterCard doesn't move up 5%, right? This is the best day they've had since the tariff pause, where we had that day where Trump paused the tariffs back down to 10%. You don't usually see these companies move up like that unless it's earnings or whatnot, right? That's big money. That's big repositioning here. The banks did also not too bad today, but also consumer retail. Pay attention to this consumer retail. It's been building and building and building. It's been broadening. You might remember, I've been talking about this one too, right? S&P 500 year-to-date gainers and losers. Okay, it matters a lot because most of your gains are here. What has been down recently? A lot of, well, not all of these names, but you've been pulling back on gains. Just look at your Mag 7, right? You've been pulling back on gains. NVIDIA hasn't gone anywhere. Amazon hasn't gone anywhere. Google, has gone somewhere, definitely, but no expansion in the last 2 weeks overall. Apple's been really healthy, but let's be honest, in the past month, they haven't really moved, right? It's not a big upswing sequence like this in terms of huge monthly expansion. It's slowing down. You can clearly see that, right? AMD hasn't done anything. A lot of names, guys, especially big tech names and AI names, haven't really done much. They've recovered, some of them have recovered losses, right? Like Palantir, but no massive expansion legs just yet. No, the money is rotating right now. They're rotating into what they believe to be an opportunity. Not in these names for next year, but possibly into, the whole rest of the market that's been doing nothing. A lot of these sectors here, consumer staples, consumer retail, and other names, right? Such as real estate names as well. Anything that had somewhat of a fear of a recession to where people were reluctant to position, especially big money, reluctant to position in a lot of these declines, unless you have two forms of puts, a Fed put and the Trump put. The Trump put's always been there. You know, Mr. Trump, President Trump loves to backstop the markets, right? But now the Fed is possibly stepping in as well. And you always know, don't fight the Fed. So now what I'm seeing here is a bit of institutional repositioning, right? Healthcare has been very strong recently, but now we're seeing the expansion of financials. You don't get to see big moves like this in financials, right? Look at the repositioning. Okay, it's been doing nothing for 4 or 5 months. This is big thrust on this price, right? Healthcare had it previously, but now you're getting to see the expansion here in XLP and consumer retail as well, and even real estate, right? Real estate could possibly get going here shortly. It's a small sector, but noteworthy, and utilities is perfectly positioned as well for a further monthly upswing. So there's a big portion of the market here that if we keep getting this uncertainty around AI and around some of the names that were on the lows today, such as all the AI names, crypto names, etc. You guys know which names I'm talking about, right? The high beta names, the data center names, the AI specific names, right? If those keep being choppy, do we have other sectors of the market for the money to rotate into now that this picture is more clear? The answer now is yes. And a lot of people have been waiting for this, myself included, okay? So now that we have it, can we possibly diversify our bets into 2026? Is the risk to reward now more favorable? Well, yes, the prices are still the same in a lot of these sectors, but now the risk profile has dropped because of this, all of this, yeah? Okay, the risk profile has dropped. And as a result, now we can possibly take a chance. I don't know why it highlighted everything. Now we could possibly take a chance on those other sectors. So when we're looking at the S&P, right, we can't only focus on big tech and say, well, big tech's not doing anything. What's going on? Amazon hasn't done anything for 3 months. Google's not pushing ever further highs. Meta is still down significantly from the all-time highs. Microsoft is still down. Netflix is still dealing with all their drama surrounding Warner Brothers Discovery. NVIDIA hasn't done anything in 4 or 5 months. Zoom out and notice what's happening here. Notice the big moves today that happen that don't usually happen on those styles of names. So keep that in mind. So that was my big introduction for the S&P, but I think it's very important, guys, to understand the context behind things. If not, I would do like all the other channels do and just tell you, well, you know, resistance is here from the all-time highs and support's down there. So I guess we'll see what we're going to get onto the QQQs, right? No, that doesn't help anybody. So we're trying to derive context here for forward positioning if you're going for the big themes. Because we could talk about small little swing trades, level to level swing trades here to there or here to here all day, right? But you guys don't want that. You guys want the big expansion trades, don't you, right? The style of trades that we hit on healthcare where we buy call options down here and then ride them for the big swing expansions. And trust me, I got you guys on tech as well, right? We're going to cover those too, but for a lot of the other sectors that people enjoy playing, keep an eye out for them, right? So that being said, the S&P, let's go through our levels. The S&P, very strong right here. Nice daily move right now. Overall, still no consolidation. We will see if tomorrow they can break the all-time highs or if Broadcom contributes to bringing down the entire tech sector, which makes the S&P a little bit weak. But overall, though, guys, very nice, right? You can clearly tell on the futures, daily higher lows are down there. On the SPY, it's a bit less obvious, but down about here, right? 680-ish are your daily higher lows. That being said, nice daily uptrend. If you lose these, you're just going into a bit of consolidation, guys, a little bit of weekly consolidation. Nice V-shaped recovery right now. Never lost the weekly uptrend, still strong. If you do get consolidation, pay attention down here. The 675 down to about 666, which we've been highlighting this entire time. We were saying if they choose to roll over, you got a nice area right there, and it's a bullish leading bias because nice bounce size and looking for the trend continuation expansion because you got the monthlies, you got the weeklies, and now you have this as well, right? Moving on further, the QQQs. So QQQs, same style of analysis, but, you know, not close to the all-time highs just yet. So the QQQ bulls are looking to set the new higher lows. Matter of fact, they were set with the lows of yesterday, whereby we lost the hourly uptrend. And now we're trying to get it back, right? So daily higher lows are set at the lows of yesterday. You see it best on the futures. That's why I bring it up. Higher lows are set. The lows of today, excuse me. I say yesterday because the candle, we're into Thursday already right now. But I digress. Looking for a little bit higher. If we keep moving lower, still looking for a new daily higher low, right? And down below is support 614 at about 604. Looking for the higher low and possible further trend continuation. Why do we have that bias? Monthly still in an uptrend and the weekly as well. Nice engulfing move or almost, let's call it an 80% retracement, right? We lost the lows right here temporarily. Now the bulls need to get the trend back. If they cannot do it from up here, well, maybe we have to pull back a little bit into the 12 and the support, establish that with some big tech consolidation, some AI woes, AI worries, et cetera, et cetera, et cetera. All just noise, in my opinion. The demand is very real. Nobody's doubting that. But obviously, when there's a decent number of short-term bearish narratives around here type of thing, right? It's going to impact the price ever so slightly, and you're not going to have the momentum that you had back in September and October. Moving into financials right now, financials, huge day for financials, massive day. KRE, look at this small and medium regional banks, guys. Big breakout, yeah? Look at the monthly chart. They're trying to go for it. This was extended consolidation. All year we've been stuck here, right? They're going for the monthly breakout, so it might be quite decent right there. But moving on to XLF, the big boy, banks and credit cards and insurance. Some insurance players today, guys, up a lot, right? Look at PGR. Big day on PGR. They've been stuck in the mud. A lot of these insurance companies, guys, have been stuck in the mud for a very long time now at this point in time. Nice bounce off the lows. You saw it on Brown Corporation. You saw it on Allstate, but even you saw it on Berkshire as well. Berkshire's been stuck here. So if you get to see insurance expansion, insurance is a big component, guys. Don't fade insurance. It's a big component. Credit cards have been very soft. We've been talking about this for a while, right? Visa and MasterCard. I've been pounding the table on Visa and MasterCard for seemingly 2-3 months now, accumulating positions, playing the wheel on it, hinting at leap call options and showing you guys my leap call option positions, hinting at the MACD cross and hinting at something that I shouldn't show you guys. As a matter of fact, no, I'll save it for my Discord members. There's one other key element. My Discord members would know what I'm talking about. Some of them. Moving forward here, in terms of the Visa was kind of, well, lagging behind its own sector a little bit. And so Visa and MasterCard, super, super big moves here today. XLF Financials, strong move, right? This was a weekly downtrend, big engulfing move. You get any weakness right here. Daily higher lows, 53.30. Looking for a new higher low. Possibly it'll come back down into our all-time high range right there. Would make a lot of sense, right? This whole area, I'll call it $54. Looking for a new higher low for possible further trend continuation, unless they just want to go for it and expand. It wouldn't be too crazy to see that because you've been consolidating on the monthly. This was the most important time frame. I don't know how many times I've referenced this time frame over the course of the past 2 months. We've been saying, looking for higher lows, for further expansion, talking about the fact that only the banks were pushing. Only the banks are pushing. Look at Bank of America. Look at JP Morgan. Look at Goldman Sachs. Look at Morgan Stanley. Only the banks. Now, maybe everything. Maybe Visa. Maybe MasterCard. American Express never waited for anybody. They've just been very strong. Very strong. Now you might be able to see insurance as well, but also some of the financial data players. Watch them. Watch for them. SPGI and Moody's. Those are still lagging a bit behind right now, but those should be having a good 2026, as I do believe the market will look for value in these strong moat companies with high competitive advantages, very predictable business models. These companies, guys, Visa, MasterCard, S&P Global, some of the insurance companies, solid business models. They've done nothing all year. Nothing. They're lagging behind a lot. So these might be some of the ones that institutions revisit into 2026 if they take profits on some components of the AI trade that have done really well this year and look to position a bit more for the broadening out of the market. These will be the names that will get picked up first. The names with high quality business models, predictable earnings, and large moats. So pay attention to that, right? Moving on to XLV Healthcare right now. I won't spend that much time on the rest of the sectors, but financials is very important to understand what's going on right there, yeah? So daily uptrend unwind, cutting the lows right here. We'll see if the bulls have it in them to kind of get it back in 2 steps. Usually when you see an engulfing move like this, you don't usually V-shape this. Usually you get it back in 2 stages. We will see. As of right now, maybe just looking for a lower high into lower low. If you get that further drawdown, you'll just be looking for a weekly higher low. Again, nice weekly uptrend right now. I'd be looking to play on healthcare, 148 down to about 145. If you give me the full retracement down into the previous resistance, which is current support level, we almost got there. I mean, if you want to really argue the point, right? We made it into these guys, but you didn't make it into the meat of the level. And that's what I was kind of waiting for. So I'll be patient for it. If it gives me that trade, perfect. If not, I have so many other things to play right now. We already played healthcare. I'm happy with the gains I made on healthcare, and I've rotated those gains into other things that are offering the same setups, but at lows type of thing. You know what I mean? Moving on to semiconductors right now. Semiconductors down, obviously, for a reason today because, well, most of the semiconductor trade was down because of Oracle's earnings. That being said, the bulls are still looking in good shape right now on good old SMH. Daily downtrend, nice engulfing move, looking for a higher low for possible further trend continuation, but we will see if they're done. Maybe Broadcom brings them down a little bit more. We will pay attention to that. If that is the case, you will also be looking at the same time for a new weekly higher low. Gorgeous weekly uptrend, right? Came into the 12 EMA, a nice support down here, 345 down to 327. looking for a new higher low. If you do pull back a little bit, as I did today, and as I will do moving forward, all of my favorite names that are relatively close to lows with good volatility, such as AMD, short put opportunity. I talked about this literally yesterday in last night's video. So maybe some of you guys got these trades. I know that all of my Discord members did clip this trade, 190 short puts on AMD, fantastic, of 50% in a single day. And even if not, it was a great level to play. NVIDIA, we talked about this yesterday, great levels to be had, 167, 165 at the low of the day, short puts on the market. We're up decent on that trade already and locked in a very good level. So I'll continue to play my favorite semiconductor names for short puts that don't look like Micron, right? Nothing wrong with Micron. Arguably, funny enough, Micron is still cheap, but I'm just saying, not all charts that look like Micron are still fundamentally cheap. This is a bit of an exception, but I use it because it's very stretched on the technicals, right? Which is why I say I'm looking for the best risk to reward plays that are already in pullbacks right now. So keep that in mind. Moving on to the Russell right now. The Russell, 1.17%, not too bad. Beautiful expansion, a lot of that due to these small and regional banks. Any move lower, looking for a new higher low above 250. Higher low, maybe for further trend continuation. Not quite overbought just yet, so you can push it a little bit more. In the event you see them give it all back, which would be surprising, but still a possibility, you're just looking for the good old weekly higher low, tons of space off these lows, 230 for the reset, eventual reset of the weekly uptrend. Very solid. You remember here, if I was saying, if you want a position on the Russell, it'll be one call here and one on a back test of the monthly cup and handle, which literally happened, right? So maybe some of you guys are in the Russell. I'm not in the Russell myself. I'm in a few small cap plays individually, which we're up tremendously on right now. I'll show them to you guys at the end, or rather in tomorrow's video overall. I'm not playing the Russell, but I am playing some specific small caps. Moving on further here into the other names, XLP, consumer defensives or consumer staples, as I like to call them, right? Not too bad. Keep in mind where we are, guys, right? You're into previous support, multi-year support and multi-year resistance levels. Not too bad. If I'm looking for an expansion trade, probably consumer staples and maybe not all names, right? Dare I say we can even maybe play the ETF. It's slow. It's not very sexy, but it might just work in terms of consistency through 2026. And XRT, consumer retail. XLY is the other one, but this is largely led by Amazon and Tesla. So it's not the best barometer for consumer retail overall. Granted, my heaviest position of consumer retail across everything, leaps and everything, is Amazon. And I think they would be a big beneficiary of this rotation for their e-commerce business. But anyways, watch this one too. XRT looking very solid for some expansion, guys. Very solid. I mean, I know there's still some stocks that are crushed, like Chipotle, like Kava, like Lululemon, which had their earnings today but are up 10%. Maybe we'll cover them tomorrow. And several other names like Nike, names like Decker's Outdoor Brands, like you guys know, right? So many names have been crushed. If you don't want to play them individually, you can play them via ETFs. But if not, just, pick whichever names you have as favorites for consumer retail overall. I'm not saying buy everything, but there are some okay opportunities, such as Cheesecake Factory, the Texas Roadhouses of the world, which have just been doing nothing all year. So there's a few thematic trades, which we'll keep exploring over the next few days and weeks as we get more and more information on that rotation. Utilities right now, utilities down, almost daily oversold. When does utilities hit daily oversold? Not very often. And when it gets this low on the RSI, usually it's good buying opportunity, especially if you're very close to the 200-day EMA, especially if you're going for a 12-monthly back test right here, especially when you can find some data center specific plays that are back testing their own 12 EMAs into support at decent valuations, such as Vistra Corporation, right? We go over some of these, Duke Energy, big pullback on Duke Energy over the course of the past few weeks, daily oversold conditions for no reason whatsoever, other than just natural consolidation. I apologize. I should have my levels printed a bit better here, but you are coming into the next area of overall support, which the markets have respected a lot in the past, right? So Duke Energy could be interesting. Some of you guys have asked me about Dominion. Dominion's okay, but I prefer the other ones for now. And maybe a company like Next Era Energy, which we've been waiting for the pullback on for a while. A #1 wind solar storage developer on the planet. So that could be interesting as well. But I got a few more energy names for you guys in terms of data center plays, and we will discuss them in future videos. But for now, we'll keep it to those utilities names since we're covering utilities. And real estate. Real estate might be interesting into 2026. Nice. I mean, I'll leave the arrow there. Nice area of accumulation, right? This is like a year of support, 2 years of resistance, looking not too bad into a rate cutting cycle and a possible no recession scenario as well. So whether it's the mortgage companies, which are some of my favorite companies, or the home builders, those could be very interesting narratives into 2026 and 2027 overall. That is your overall market rundown. We're not going to talk about the VIX. We're not going to talk about yields today, just to save some time. So we'll get into gold and then crypto and then our big tech names. So quickly talking about gold. Gold actually getting its actual breakout, guys. Not too bad, right? We were struggling with this range for a while, a little bit, right? And they struggled with the range, but the bulls always retained control. They never broke below the lows. A little bit of an expansion leg for gold. Next target remains 4,400 for gold overall. The weekly uptrend is still very nice, although has slowed down from this period in time right here. And monthly conditions still are a little bit overbought on gold. So, you know, targets would be 4,400 and 4,500 psychological. We will see if they can keep this upswing alive or if we just get sent right back down into the range of consolidation. Not the greatest velocity on gold right now, but a very stable and slow uptrend nevertheless. Moving on to Bitcoin right now. Bitcoin, well, I mean, trying to kind of keep it up, right? Daily, still trying to uphold this trend right now. Higher lows are still planted at about 87,700, so you don't want to lose those. If you do lose those, well, sadly, you lose that daily uptrend. At the same time, your bounce size is not that great, right? It's only about a 38.2 bounce, so you don't want to lose that uptrend so shallow into a weekly bounce, or it's going to be a bear flag confirmed, and you will head a little bit lower. But Bitcoin not looking too bad. The monthly is trying to establish. You see, we came right down here into the 26 EMA. So long term on Bitcoin, I still do enjoy accumulating some Bitcoin for the long term here, but short term swing trades are still a little bit tough. If you are taking that trade, just make sure you do trade it with a stop loss, just as to not be unwound by a possible bear flag to the lows. And your upside targets, of course, would be the 107 range, which would just be kind of the, not quite the weekly highs, but let's just call it a 618 retracement if I had to just guess, right? Well, there it is. It's up here about 102, 105 area. Not too bad of a take profit range with such a tight stop loss. Moving on to Ethereum right now. Ethereum as well, not too bad. Daily uptrend still remains intact. So your higher lows are trying to be set by the bulls. The ones now down below us are about 2,900. So same concept. If you're looking for some short-term Ethereum swing trade longs, this would be your stop loss. If you're looking for expansion, you'd be going into the resistance range right here. And that would probably be a 618, a retracement as well, right up there, 3,700. Not too bad of an area to kind of target overall. That being said, you want to see a better bounce on the weekly because we eventually have to control this weekly time frame as well. It's been a nice bounce, but you got to reverse this weekly downtrend too at the same time, right? That's going to take some time, but overall, long-term on the monthly, is it a good time to be accumulating some Ethereum? If you have a long-term thesis, talking the next 2, 3, 4, 5 years for Ethereum type of thing, the longer form cycle, then not a bad location to be possibly adding to some longer term Ethereum positions overall. That is everything for your overall market rundown. Now, let's dive into our big tech names. So moving on to good old Apple. Apple down about 0.25% today, but the daily uptrend is still definitely intact. Higher lows down here, 265. The bull still in control, looking for a new higher low into our support range as well, 275 down to 267. So this one, we've kind of beaten this trade to heck right over the past few weeks. Overall, it's weekly overbought conditions. The monthly is very extended from the 12 EMA and also monthly overbought conditions. So no, I'm not swing trading Apple up here, but if I had to, well, the entry would be pretty much now into support with a stop below there. And then you would be targeting the 300 level of psychological expansion for a short duration swing trade. Am I buying any leaps up here? No, because the technicals are very stretched on the longer form time frames. You might remember my last batch of leaps was down here on Apple, which you took profit into 2 ranges here and then the all-time highs. Made a good amount of money on those. And now we're waiting for maybe a more structural retest of the 12 in the event that it does happen. Am I buying any Apple shares up here for the long term? No, because the valuation as well is a bit stretched here at a 3.2 peg above 270. So no trades for me on Apple right now, and also not selling any long-term shares. It is just a hold for me. Moving on to good old AMD right now. So AMD, bit of a drop and then a slight recovery here today. They did not flush these lows. They didn't close below these lows. So the daily uptrend is still maintained at this point, but one more day or a close below would put an end to that, would be a daily downtrend and just another possible leg of weekly consolidation. After 3 weeks worth of bounce, I mean, we haven't done very good, right? We've only kind of recaptured 38.2% of the move, which is why it's important. If you lose this daily uptrend, you kind of know, right, that the bears are probably gonna have another chance at bringing us down to 190, 180, which is previous resistance. I'm not saying it's going to go there. I'm just saying watch the price action, right? Any dips, like the dip from today, I'm playing short puts under the market, 190 to the 175 range. That being said, would I be adding to any AMD shares here for the long-term thesis? The answer is yes, here and all the way through there, touching the 12 EMA. This is the zone of accumulation for me on AMD as the valuation around 200, even 220, 10% higher. It's a one peg, right? And a low 30s forward multiple for some beautiful revenue and EPS expansion through late 2026, 2027, and 2028. Moving on to Amazon right now. Amazon down about 0.65% today. Now, very choppy price action, but Amazon is looking to do one thing. We have the daily downtrend. We're trying to reverse this into a new uptrend, but this is a huge resistance zone, right? 240 down about 230, let's call it. Huge prior resistance area for Amazon overall. Now, that being said, daily higher lows are set. 225. If you lose this, you're just going into more consolidation, more weekly chop areas, trapped between resistance and support. So as a result, I will be selling put options down here, 220 or less for the wheel strategy. And I am still accumulating Amazon shares because I do believe the valuation of Amazon here around 220 is very fair. 28 forward multiple. So for me, shares, yes. I am in lead calls as well. And I am playing the wheel under the market on Amazon. Moving on to Google right now. Google down 2.25% overall, just kind of sideways consolidation with a slight downward bias. Now pay attention, you lose this 12 and you lose this daily uptrend a little bit more. Well, that's just going to be weekly healthy consolidation, weekly overbought conditions, monthly overbought conditions, and a very stretched price from the 12 EMA. It would not be foreign to see a bit of consolidation on Google, and that might bring us down into the whole 290, 280 level overall. So pay attention to that. Am I buying Google shares up here? No. Is it that expensive up here? No, but I just don't believe the risk to reward is as great as it once was. So I'm not selling any of my long-term Google shares. But if I had Google shares that I was swing trading, would I be interested in repositioning these shares into other big tech companies that have not had the scale of rally that Google has had so far? Yes, as a matter of fact, I would. Would I be starting any new leap call options up here? Probably not. The risk to reward is not worth it in my opinion, but very strong price action still. But you would not be surprised to see Google consolidate a little bit after such a historic move. Moving on to Meta right now. So Meta bouncing from the support range, 640 down about 630. It's not the strongest level, but it is kind of the closest one that you do have right now. And also the moving averages are there too. The bulls will be looking to kind of protect this nice daily upswing that they've created, right? With a new daily higher low. We'll see if they can establish it here and try and attack the resistance range, which is currently about let's call it 705 down about 680. This whole resistance target for the price right now. That being said, on Meta, am I doing any swing trade longs from here? Not short term, but do I have leaps? Yes, I do have leaps on Meta, which were accumulated kind of in this lower region right there, especially into oversold conditions when the price was down, what, 25% from the highs. Very attractive in my opinion. Around 630, 650, 630, who's counting? It's 5% away. Does the valuation still support some long-term share buys? Yes, and I have been buying some shares on Meta. 21 forward PE around 630 and a 1.63 peg. Decent valuation, decent growth in the future, very decent net margins. So Meta, although they have been consolidating and are still stuck in this weekly downtrend that the bulls are trying to reverse slowly, and also into monthly consolidation in the context of a beautiful monthly uptrend, is Meta still a nice buy? I do believe so. Moving on to Microsoft right now. Microsoft, well, just consolidating around its 12 EMA. Price action is very choppy. Big daily downtrend. The bulls tried to go for the uptrend push, got rejected from resistance. 500 down to about 490. Not too bad. It's still around the 12 EMA, or 200. Well, it's the 12 EMA on the monthly, which is the 200-day EMA on the daily, right? That being said, remains to be seen if they can crack above 492 and get this daily uptrend going. We haven't lost the lows. They're trying, right? If you move a bit lower though, daily downtrend, that's just another weekly leg of consolidation right here, which might bring you into the whole 455 to 430 pocket. I enjoy Microsoft from here, 470s, down to like 450. This is the pocket that I want to buy because usually when you can find Microsoft at the 12 or between the 12 and 26, usually in the context of bull markets, this is bear market, right? But in the context of bull markets, you guys tell me, has it been a good opportunity to go shopping for Microsoft in the last, 10, 15 years? When it's between the 12 and 26, the answer is unequivocally yes. So I will be participating on a technical basis, but also the fundamentals have pulled back decently. We're under a 30, around 470 PE on a forward basis, and a 1.66 peg. So shares for me, yes, and playing the wheel down here as well. Yes, 470 and under. Moving on to Netflix right now. Netflix, well, not that bad of a day, 1.5% to the upside. We will see who gets the deal. There's going to be some drama. There is going to be some drama between Netflix, between Paramount. Who's going to get Warner Brothers? Who is not? We will see. No need to predict that overall. We'll just see what happens. Netflix, nice oversold conditions, though. I am buying some shares, even though we're in big monthly consolidation, almost close to the 26 EMA. You are significantly off the highs, right? About 30% from the all-time highs. Usually that's a good time to be buying Netflix, especially when you can couple that with a, you have to remove about 10% because we're 10% lower than there right now, roughly. Under a 30 forward price to earnings now, and under a 1.5 peg, usually a good proposition to be buying Netflix. You got the MACD finally crossing after 2 years of expansion. This doesn't mean that it necessarily has to follow like this. The MACD is lagging, right? Oftentimes, see, it only crossed green here when we were literally like 8-9 months into an expansion phase, right? So oftentimes the price leads the expansion and the curl of the MACD on the monthly time frame at least. I do want to be buying here, right? A nice consolidation phase for the stock. So I am buying some long-term shares and even selling some put options under the market. And I am also starting some leap positions on this one as well. Deep 2027 expiries though, as it may be noisy on Netflix for the foreseeable short-term future. Moving on to NVIDIA right now. NVIDIA down 1.55%. At one point today, NVIDIA was down 3.5% just from the Oracle noise. All just noise. And we've been talking about noise on NVIDIA. Seems as though we've been talking about noise on NVIDIA for the past, 2-3 months at this point in time. The demand is there. The valuation is clear, right? Around 180. There's still a forward 26 PE, a 1.15 peg, which is very low. And their earnings guidance is absolutely phenomenal, right? That being said, the price action has been very choppy. I do agree. So we are currently still in support, 178 up to about 185. I am playing short puts under the market and also accumulating some long-term NVIDIA shares. And I'll be honest with you guys, I also do have an NVIDIA Leap in my portfolio too at this current stage, as I do believe now that the price has compressed, the valuation has compressed, it could represent a decent risk to reward opportunity. We are currently also in monthly consolidation for this stock. Not quite at the 12 EMA, but I'm buying one batch here, then one batch down there if we do fall back into it, of course. That being said, weekly, no control just yet. The daily, you guys need to get this. They need to get and sustain this first, right? Still looking for a higher low, right? Anything above 174, looking for that higher low to protect the daily uptrend, but still no lift on good old NVIDIA, but a decent accumulation range in my opinion. Moving on to Tesla right now. Tesla, down about 1%, but still the price is holding fairly well. Daily uptrend is very nice right now. Higher lows down here at 436. If you lose this over the coming days, daily downtrend just means weekly consolidation. It's been a nice bounce, right? Weekly downtrend, nice bounce. This is like a, let's call it, just looking at it, 782 bounce, right? 78% bounce. So if you do consolidate, you know that the likelihood is for a weekly higher low and go for the trend change. Good thing we have a couple of support levels back here. 430 down to 417, and then 405 is the next big one, right? So you're just looking for the weekly higher low to go for the possible bullish expansion on Tesla if there's any further weakness. As right now, it is simply as well monthly consolidation, right? So the higher time frames point to the fact that arguably this is a bull flag, and that if you are bullish on Tesla, you should be leaning in to these levels, right? I'm not saying there's no risk, but the price action shows that we should be kind of leaning in to those levels if we're going for this thesis right here. Because if you're going for the car manufacturer thesis, this trade will never make sense, right? Because the valuation won't make sense if you price this in. But if you're going for this aspect of the thesis, okay, then it would make sense to play this kind of bull flag into some possible expansion and just play the chart. Moving on to Palantir right now. Palantir down about 0.2%, but recovering a lot. Palantir was down like 3.5 over the course of the morning, recovering most of that, and still trying to hold above this whole big resistance range. This is a very choppy area of price action. We're above the EMAs. We have the daily uptrend, so any weakness, we'll be looking to establish a new higher low, anything above 163. Higher low, looking for more expansion into the $200 range again. The weekly, in terms of the size of the bounce right now, meaning if you somehow lose this daily uptrend and you trend lower, have the bulls create enough space off the lows to get the trend change going. Yes, 618 bounce, meaning if you falter, well, I don't know what happened there. If you falter, come down, you might just be looking for the reset here in the uptrend overall. The monthly came down and almost tagged the 12, almost, right? So that buying opportunity has come and gone. It was a very short-term buying opportunity for one day, as a matter of fact. But if you guys are able to get it, good stuff. If not, if you're waiting for a bit more, well, a lot of our Discord members as well, whenever Palantir has a big red day, you know, selling puts down here, if you're interested in the whole 150 to 140 range, not the worst proposition overall. Now, moving further into SOFI, SOFI down about 0.07. SOFI has not been doing much over the last 3 days, but still not a bad price for SOFI, right? In terms of the monthly makes the most amount of sense here, guys. Previous resistance, this is the support, 25 down to 22, and this is just looking for the monthly higher lows, right? We've been consolidating largely sideways for a long period of time at this point. Some people are pointing out the head and shoulders. Okay, if we do get that head and shoulders, what's the worst that can happen? What, down here into the monthly 12 EMA, into huge resistance, huge support that the bulls have defended, and give us a beautiful re-entry for a higher low swing? Possibly, but just if you're forgetting that, if you're just looking to buy SOFI based on pure valuation alone, 27 is not a bad price, right? It's a 1.1 peg, a 7.34 on a forward price to sales, so not that bad. The bulls are looking for, obviously, the daily uptrend reset. The way that I've been playing this one is either one of two things, either accumulating some shares that we're looking to hold for market cap expansion, 50, 60 billion plus in terms of the company, but also short puts, man. Short puts have been money down here, selling $25, $24 short puts into the market, collecting some good premium. If they assign you, you're getting perfectly into the support range. And if they don't, you just get to pocket the premium. So kind of funding these share purchases with a little bit of premium farming down here as well. Moving on to Uber right now. So Uber recovering a little bit from the last 2 days worth of a disaster. So it was a daily uptrend. You've fully forfeited everything. And although the daily is very choppy, you now have to start everything from scratch and attack this resistance range again, 92 down to about 87. Well, just understand what's going on here, right? It's monthly consolidation on this stock, yeah? It's been a weekly downtrend now for a couple of months. Nobody's questioning that, right? Now, how I'm playing it is twofold. Number one, accumulating some shares for the long-term portfolio down here, as Uber is quite attractive at the 83 level overall. It's a 1.5 peg and a low 20s multiple, but also selling some put options down here because we're very close to a huge monthly level. Big monthly prior resistance, current monthly support. So I'm playing the whole 81 down to mid 70s for some short puts under the market. If they want to assign me down there, perfect. That's where I want the shares. If they don't assign me down there, perfect. I get to collect the premium. That being said, Uber not looking that bad, but still the bulls on the short term, a lot of work left to recapture the trend that sadly they just lost, right? And now lastly, moving on to TSM. TSM was down over 3.5% today before recovering half of that and closing just under the all-time high range right there. Not too bad in terms of short-term price action, right? A nice daily uptrend. If we see more consolidation tomorrow from the Broadcom earnings or anything like that, just looking for a higher low, anything above 283, looking for a new higher low for possible further attempt at the all-time highs right there. TSM kind of stuck here, right? We had the nice weekly downtrend into the 12 EMA, support range established as well. So a lot of room here for the bulls, you know, kind of just dance around in this area, consolidate the price a little bit. We never got the full pullback to the 12 EMA, which is what I was looking for, you know, that's what I look for my leap options and things like that, larger swing trades where the fundamentals and the technicals line up to where these become kind of like a cheap no-brainer buy. It's not expensive right now, but it's not like a no-brainer buy up here, right? Down here becomes a no-brainer fundamental buy and also a no-brainer technical buy because you cool off the monthlies. It's a monthly 12 test of the 12 EMA. You cool off the weeklies a little bit more, right? So that's when you have kind of confluence. So TSM up here, would I be DCAing for a long-term share position? Little nibbles, right? Because the valuation isn't the best up here. It's good, but it's not like super cheap up here. Kind of like Google, right? Not super cheap up here, but still fair, in my opinion. Me personally, I'm just holding and I'm not really building any swing trade longs up here either. That's everything for today's video, guys. Sadly, not enough time to do this biggest gainers and losers. I know some of you guys don't mind an hour and a half videos, but you know, unfortunately, I'll kind of have to end it here. But tomorrow, I promise, since tomorrow we probably won't do major earnings recaps and also major market rotation recaps. We covered all that. The biggest days were yesterday and today to notice what happened with the Federal Reserve, to notice what happened with Oracle and Broadcom earnings and how that plays into the AI sentiment trade, and notice the rotation and things like that, right? So now we've kind of set the table for everything that you guys know. So tomorrow, I promise, we will spend a lot more time on this list right here because there's a few themes that we want to further explore. So sorry I wasn't able to cover them over the last 2 days, but you guys know with earnings sometimes it really extends the length of the videos. So just to keep it under an hour 20, I will end it here. And tomorrow we'll do this. We'll do the portfolio recap and maybe we'll just skip earnings altogether unless you guys really want me to do Lululemon earnings, right? So that's everything for tonight. Hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these videos every Monday to Friday after the close. And last but not least, if you have any questions, please feel free to ask them down below in the comment section, and I will always be there to answer you guys as soon as possible. That's it for me. Take care. Have a good Friday session in the markets, and I will see you guys tomorrow after the market close. Hopefully you guys had a very good week of trading overall in the markets, and hopefully your portfolios are looking better now than they did at this same period of time in the month of November. That's it for me. Peace.